Hi everyone, what's going on? Today we got a part 2 of our intro to trading series where we go over like institutional versus retail trading, a little bit of sort of size and quantities of scale, and then what sort of, once you funded an account, trading would actually look like sort of on the most basic level. I hope you guys enjoy. If you do, please leave a like and subscribe. Thank you so much.
The idea of institutional versus retail investors is like something you'll hear a lot when you start reading more about stock markets and trading in general. Institutional investors generally refers to like private equity, hedge funds, or any sort of group of money market managers. These people, specifically these three, have a ridiculously large portion of assets under management. Literally multitudes of the US GDP. I believe this is 2023, but I'm not completely sure. I'll have to double check that. But these are sort of the big three institutional traders who you'll often hear about and should think of sort of synonymously with institutional trading. On the flip side, Robinhood, obviously, is the sort of namesake example of stealing from the rich and giving to the poor. And the whole sort of marketing team was very gung-ho about this idea that they're getting retail investors in to fight back against these large institutional corporations. But that being said, they did a good job of sort of bringing the masses and bringing trading to the masses, but the masses don't actually have that much money. And so in comparison, I said this before, there's a lot more retail traders than there are institutional traders, but the institutional traders hold so much more wealth that it's not, really a close comparison. And so I believe the retail market is in the billions of dollars, whereas like these three institutional companies are in the trillions of dollars. And so just for reference of scale, I feel like I want to go into this, and I'm going to need to go into this more, but like a million versus a billion versus a trillion, these are like vastly different sizes of, or units of measurement and size of things. And I just wanted to give some examples of like the actual scale of difference between them. And so like, I think I've heard this one before and like sort of often quoted, 1 million seconds is 11 and a half days, 1 billion seconds is 31 years. Like one is 2 weeks, one is a generation. Like I think I've heard that one before. I've seen it on TikTok. I've seen it on Instagram. Like that's fairly well discussed. But 1 trillion seconds is 31,000 years. Like this is back to the Ice Age and stone tools and woolly mammoths. Like this is before the invention of of agricultural societies, like earliest writings era, I think. Like this is so far back in time that like it was hard for me to grasp the sort of magnitude of the difference. And so in a similar note, $100, like if you use USD $100 bills, you can fit $1 million into a briefcase that's like this size. It's like, I don't know if you've seen like in the movies, they got the $10,000 bands. It's $100 bills. It's about this thick, bill wide, bill shape. And so like 2-3 high fits in a briefcase pretty comfortably. Like you could fit $1 million in a briefcase. $1 billion would be 10 Costco sized pallets. Like these are as tall as a person, as wide as you putting your arms out all the way around. And it would take 10 of these to have $1 billion. $1 trillion would cover the entirety of 2 full soccer fields. Like, so these people who are hitting like $500,000 or half trillion, $500 billion like net worth valuations, like they have literally enough money to cover an entire soccer field in pallets of $100 bills. Like that is their net worth, like depicted visually. And like just the sheer size of all of this really blew my mind and really made me like realize quite how large the scale of some of these things are, specifically the US debt, and like how much it is something that we're not going to solve in a generation. Like, just got to throw it out there. It would take you more than 31 years to figure out, like, you know, how to get the US debt back to a manageable level. In my eyes, a manageable level. So back to sort of the point of this, which is trading. We have some basic trading options. These are like actual screenshots I pulled from my Fidelity account. So you can see, like, this is, as you fund an account and like go to trade, this is literally the screens you're going to see. It's one of these two. This is the simplified ticket. This is the expanded ticket. So buy, sell, pretty self-explanatory. Can't figure this one out by yourself. I think you might be too far lost for these presentations, but jokes aside, quantity is also relatively self-explanatory. You can choose between dollars or shares. So in the simplified view, you just pick shares or dollars. Here it defaults to quantity, but you can if you click on it, you can change it to be in dollars. Time in force, which isn't an option on the simplified ticket, but is here on the expanded ticket, means like how long you want this order to stay open for. And so the two that are like the most common are day orders or market orders, which I guess day orders stay open for the duration of the day. As the market is open, the order will stay open. If they can fill it, they'll fill it. If not, at the end of the day, when the market closes, the order will cancel and you'll get your money back. And you can try again tomorrow. There's also good till cancel orders, which, as they sound, last until they are canceled. Lastly, looking at order types, you have these two, market and limit, which I think are the sort of more common ones and things you'll hear about often, or at least want to use it to begin with. Like, these are the simplest and easiest to figure out by yourself, or like most intuitive. Market just means you're going to execute the trade at whatever price the stock is currently trading at, meaning whatever somebody's asking, you're willing to pay for however many number of shares or for whatever amount of money. It's basically saying, get me these shares as quickly as you can. I want in on this company quickly, or I want out of this company as quickly as you can. Limit price, on the other hand, lets you pick a limit order, on the other hand, lets you pick a certain price and say, okay, I want to buy my shares at a certain price. So like, if I bought NVIDIA at $150 and I wanted to sell it at $200, I would set a limit sell order at $200 for my shares. And I could specify, there would be a button to specify the shares I wanted to sell, or sell all of my shares. In a sort of similar note, a stop loss is like a sort of like a limit where you set a price, but instead of having, so a limit says only execute above X or below X price, depending on if you're buying or selling. A stop loss says after the stock hits a certain price, execute a market trade. So I want to get out immediately. And this is better for like super volatile companies. You don't necessarily need to do this as a like intro trading or introductory trader. Similarly, a stop limit combines sort of a stop loss and a stop limit. So it's you have your share price that you want to trigger it after, i.e. if it goes up to say $210, I want it to sell down until it drops $205, but then wait at $205 until the price goes back up a little bit. And so that might be how you would use a stop limit. A trailing order, on the other hand, is sort of, instead of picking a price as the stop limit or stop loss price, you're picking a dynamic price. So it's like, you would say I want a trailing limit order 10 cents behind a trailing stop loss 10 cents behind the day's high. So as the price goes up, you're not going to sell, and then as it drops below 10 cents, below that day high, it will trigger your order and execute your shares or execute whatever buy or sell you're trying to do. And then lastly, conditional orders are like sort of as they sound, if A, then B, or if A, then not B. And there's a bunch of combinations you can do and throw together. These are, again, sort of the next step, making it a little more complicated, really only needed for high-level trades. But I think that's all I have for today. This was a little bit long.